Hello traders, this is Rich from Tradesight. This is the market preview for Wednesday, May 7th, 2014. We had a kind of a broad-based drop with a lot of acute selling in, or lack of bidding really, in the Nasdaq patch. Volume was down for the most part, but we kind of just got back to the relative weakness in Nasdaq. You really see that when you dig down to the internals. The advanced declines on New York were very, very poor, minus 1,100 issues. But on the Nasdaq side, we closed minus 1,650 issues, which is just another poor showing. In those very tepid and sometimes divergent advanced decline readings, while the market was advancing, are really coming home to roost here. So let's move on and take a look at the major charts for the futures, and then we'll take a look at the internals as well. Here's look at the ES futures. You can see that the key takeaway here is that the futures were really unable to get above this 1875 level, rolling back down below the 10 EMA, actually essentially marking an inside day here. It was a down day for sure, but we didn't trade outside the previous day's range. So that's the one positive for the bulls, is the fact that the bears did not expand the range to the downside. The 50 DMA and the 7/8 level at 1859 are going to be really, really important. If we lose those, as we said in the previous reports, we're going to be quickly looking at that 6/8 level. To the upside, if we do roll to the upside, 1890 is going to be a level to watch. That's the last level that was traded at least even intraday. So those are the two levels to watch. But this is definitely not a positive development, but certainly there's no resolution just yet. Now moving on to the Nasdaq side of the market. A little different chart here. Much more relative weakness. We're already still contained below the 50 DMA. It was essentially still an inside day. We did, sweep the low by a tick, but does that really matter when you really get down to it? No. What we really need to do is see some expansion to the downside here to see the bears really kind of regrouping here and getting their paws dug in. The two-ways level at 35.15 will come into play. If we roll to the downside, to the top side, this 4/8 level still remains key resistance. If they break that out, they got to get through the 50 on the bull side, and then they can start talking about the 5/8 level, and then the much more important 36.71 level at 6/8. Dow Jones, here's the YM futures, was inside. We're still above the 50, so you can see that again. This is just another little piece of evidence that the broad market still has relative strength versus the Nasdaq. But if the Nasdaq really starts to roll and hang and start to knock out lower lows, we're going to see this yield and give way. TLT pattern is really interesting, especially with this being a refunding week. We've got the 10-year auction tomorrow, and then the 30-year auction on Friday. We're just winding up right here, right around this 8/8 level. If we break out either way out of this mini range, we've got this candle here. We've got an inside candle inside of that, and then today was inside the previous day, so we've got a triple inside day going here. And if we break this out either way, these other levels are going to come into play very, very quickly. So be prepared for a pretty sharp move if we leave that range. Oil futures still kind of just banging around this 100 level at 4/8. We're still below all the major moving averages, so the chart is negative. Right now, all we're doing is just kind of arresting the slide here after getting to 9 bars down on the seeker startup phase. Just kind of marking time here. We could pivot back to the top side here. That's certainly possible. But the fact of the matter is that we're still below the major moving averages, and we could drop down to play with this static trend line again down here in the area of the 2/8 level. Here's a look at our early cycle multi-sector daily chart. Pretty much weakness across the board here. XAU didn't really do too much to kind of buffer things here. Really wasn't a recipient of the source of funds. We had some pretty good weakness in the banks. So you see the banks are expanding the range to the downside. The BTK is still really unable to get anything going to the upside. But all in all, not a horrible day. The semiconductors are still banging around and hanging up here closer to range high. But we did have a negative day. I think the one thing to really take away from this, though, is the relative weakness in the banking index. And if this persists, this is going to be problematic for the broad market. Now here's a look at our multi-sector daily chart. This time we're going to look at the late cycle stuff. The green line here in this chart is the the BKX. Again, like we said before, really weak. But what you want to see is the transports and the oil services, the OSX, start to really step it up here. The oil services was not bad today. Good relative performance, but the transports did have some weakness today. So while we have the BKX weak, if we can see the other sectors step it up here and to start to absorb that money, that's okay for the broad market. But the one thing we can't fight though is if the Nasdaq continues lower, this is just going to be too much for the broad market to handle, and it will ultimately succumb. Here's a look at the 10-day trend. The 10-day trend did inch up today. We're at 1.20, which is a little bit above the midpoint here. Obviously, if we get to this 1.35 area, we're going to be short-term oversold in the market. But as you can see, there's plenty of room here to move before we get to that 1.35 oversold area. And conversely, there's plenty of room to the upside here before we get anywhere near an overbought reading in the market. So market's got room, gas in the tank to move either direction if it wants to. All right, here's a comparison chart of the broad market. That's the SPX here. That's the red line versus the banking index, the BKX. You can see the BKX here is really starting to roll lower, has qualified a lower low here. Here's your high, here's your low, here's your bounce or the B wave, if you will, and here's your C wave undercutting the previous low. So we're definitely starting to see some weakness drip into the banking sector, and this is definitely going to be a problem for the overall broad market. All right, and finally, here's a look at the multi-sector daily chart. You see the XOY was real strong today, which was a real help for the broad market. The oil services was also strong, outperforming the market. Transports were lower on the day, but not too bad. You can see as we look down the chart here, the BKX was down 1.5%, which is a real problem. We really need to see a better performance out of the oil and the gas stocks if that's going to happen, and especially also needs to be supplemented by the transports. The broker-dealers were very weak, which tend to be more volatile than the overall big banks. The housing sector was also extremely weak today, and there were a lot of signals on the scans today for downside follow-through on those. So make sure you take a look at that video as well to make sure you're aware of those signals. The other thing was the semiconductors were fairly strong today, which is a little bit of a bright point for Nasdaq, but really not enough to hold the boat up. So definitely a lot of things potentially being changed up here. Next couple of days are going to be important because there's not a lot of economic data coming out. So the market's really going to be kind of trading organically here, and that's going to, I think, tell us a lot this week. I think this is a much more important week than a lot of folks are making out to be. A lot of people want to point to the week that's got all the most data and how the market reacts to that, but sometimes when the market's left to its own devices without any data to respond to or prepare for, that's when you see its true color. So let's see what it has to tell us this week and make sure we're taking notes. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.